So there's a phrase in investing, and it's actually a phrase all over the place. And the phrase is, this doesn't make sense. It was happening in June of 2015 when Donald J. Trump came on the scene. People couldn't believe what was happening. He was foul-mouthed, he was mean, he was angry, he was offensive, and he was gaining more and more popularity. And over, people kept saying, this doesn't make sense. This doesn't make sense. There is something going on in the stock market that doesn't make sense. But I'm going to tell you exactly why it does. Stick around. Hey everybody, this is RC Peck with Fearless Wealth, and this is my YouTube channel, I almost said video channel, where I help people retire strong. You have to retire strong, and you have to stay retired strong. And in order to do that, you have to think about your money from a market point of view and not your own individual point of view. So what I want to do in this video, and what I do in most of my videos, I want to show you price charts. I'm going to show you 4 price charts. Even if you're not getting ready to retire, or you're in your 80s or your 60s, understanding what price is doing is very important. Because at the end of the day, your portfolio goes up and down, not based on your risk score or how much money you need in income, but what the market is actually doing. So let me do this. Let me pop over to the first price chart. I'm going to show 4 price charts here. Now, this is the first price chart here. It is what's called the advanced decline line, okay, of the S&P 500. If this line is going higher, that means more symbols are advancing than not advancing. And one thing that's very important is to see this line break out to new highs. It attempted to break out and stay above new highs in August of last year. Didn't happen. You can see that. That's the kind of the spike right there above the water. And now it's broken out to new highs. So the advanced decline line of the S&P 500 has broken out to new lifetime highs. That's a bullish sign. That's a sign of strength and not weakness. Okay, I'm going to show you 4 charts. The next chart is of the Nikkei average. This is the Japanese stock market. It's in Japanese currency. I know that means yen. And it is broken out. It's broken above its 2021 double or triple high right there. And it's broken out with really a vengeance. Now, that's not lifetime highs. It was actually higher in 1989. So, but what we are looking at is 30-year highs here, which is amazing that it's not lifetime highs. It's only 30-year highs. I think the Nikkei is going to go out to new lifetime highs this year. Now, this is important because Japan's the 3rd biggest economy on the planet. And like I say, it has not broken out to new lifetime highs for longer than a lot of people have been alive. December of 1989 was the last time this thing was at lifetime highs, and it's above that. So we have the 3rd largest economy on the planet breaking out to new lifetime highs. I just showed you the advanced decline on the S&P, and that is broken out to new lifetime highs. Then I want to show you this. Now, this is the U.S. stock market relative to the U.S. bond market. So if this black line is going higher, that means the U.S. stocks are outperforming U.S. bonds. That happens typically when the stock market, almost always, is in strong hands. It's in a strong mood. It's in a bullish mood, right? Prices are moving higher. So that means U.S. stocks are outperforming U.S. bonds. And you can see that wasn't the case for quite some time. It almost kind of right there, call it November of 21, up until just recently, called the beginning of June, where it was literally going sideways, about 18 months. That has just broken out to new lifetime highs. So that's U.S. domestic stock relative to U.S. bond. And then the last thing I want to show you is the same thing, but all world ex-U.S. So if you live in the U.S., that's everything but the U.S., also known as international. And it's divided by the International Bond ETF, BNDX. So what you see here is international stocks, okay, again, that's all world ex-US, broke out to new lifetime highs, came back down within that, right? It came back kind of down into this weather system, and found more buyers. And when it finally broke out again, it found more buyers, and that broke out to new lifetime highs. So now this is not, it's not just these 4 stocks. I'm just simply showing these 4 stocks as there is strength building. And this is important because there's a lot of stuff that doesn't make sense, right? It doesn't make sense that the yield curve is so inverted. Now, it actually is inverted. We will get a recession. I don't know when we'll get a recession. Does it make sense that unemployment is so low and the market, with all the bad news that's hitting it, is going higher? But the thing is, we have to adjust our worldview to what is actually happening, not what we think should have happened. And this period right now really reminds me of 2015 when Trump came on the scene and was saying things and maybe horrible things and awful things, and yet he kept getting bigger and bigger and bigger and finally won. And through that whole period, maybe even him, people were saying, this just doesn't make sense. So here's the thing. We have an election coming up in the US in about 17 months. For easy math, let's call it a year and a half. Look, the market could go into just a crazy uptrend in this next 17 to 18 months going into that. It's very 1998, 1999. Now, in 1998, there was a 25% correction within the year. So this is not going to be a free ride, by the way, okay? But it could be that we're going to have a pretty big blow off top, but not like over a week or a weekend or a month, but maybe over the next 12 to 18 months. Again, we want to align our worldviews to price because that's what's right. We have to assume what's right, and we assume price is right because you can't recalculate price. You can't come back a month later and go, yeah, actually, price was wrong. We need to restate price. Price is always right, even if it corrects. Thanks, everybody, for being in my world. Like, subscribe, leave a comment. All of those things help. I appreciate you watching these. If you find yourself questioning, or let me actually say it this way. If you say to yourself, I trust and like my advisor, okay, and you've maybe been with her or him for 10 or 20 years, but you don't understand why your statements are like 40 pages long, and right, why you own 30 or 40 or 50 symbols. There is a likelihood you have something called replication happening. It's very dangerous. It's expensive. It costs about $35,000 per million per year in losses or leaks. That's the average leak we find per million per year in someone's portfolio when we do a portfolio x-ray. I don't know if that's for you. If you want to find out more about the portfolio x-ray and get on our calendar, you can just go down into the description and learn more. Thanks again, everyone, for being in my world. I look forward to seeing you on the next video. Okay, bye.